This is your host, Stephen Sargeant, another episode of Around the Coin, and we're talking to a futurist, not Brett King, but a friend of Brett King, Emmanuel Daniel, who runs the Asian Banker. Been in banking, started this organization almost 30 years ago, but he talks about the inflection points, what the future of personalization of finance is going to look like, and what happens with banks, crypto exchanges, fintechs. This is a great conversation. We talk about what the banks need to do. We talk about the super app infiltration in places like Asia. We cover everything down the gambit. And for a futurist episode, we don't even talk that much about AI, but we do bring it in situations where it's going to have the biggest impact. This is a true futurist, a really great conversation for anyone that's in payments, tech, especially in the crypto, but more importantly, our traditional banker friends that listen to these episodes as well. Hope you like it. This is your host, Stephen Sargeant, the Around the Coin podcast, and we get to talk to almost another futurist. We talked to Brett King, at one of my first episodes running the podcast, and now we get to speak to Emmanuel Daniel, who's based out of the Asian region when it comes to all the exciting projects you're working on. Emmanuel, tell us a little bit about yourself, and I'm going to jump in. I'm very curious about your background and what you're building in this ecosystem.
Stephen, it's funny that you mentioned Brett King because Brett and I are the best of friends. And I've known Brett from long before he was a futurist, when he was something else, running training and in Singapore, in Hong Kong, and then in Dubai. So in fact, I would say this all the time, which is he completed the first of his, the banking 2.0 book in my house in Singapore. And I have the second copy of the book because, his first copy went to his wife and his second copy was to me. And so I have the honor and privilege of being his dearest friend. And that was like 10 years before I wrote my book, and I always knew that I was going to write something on the future of finance, but it took a long time to get my act together. So I'm the founder of something called the Asian Banker. I started that in 1996. And through that as a platform, it's part publishing, part research, part consulting, and then the event side comes in, the traditional publishing trade type of thing. But what it did is it gave me a front seat view of a lot of the developments taking place, in across the Asia Pacific region. So when you think Asia, you're thinking at least 18 countries, which are liberal and progressing very quickly. And then we grew into Africa and the Middle East. So I have an office in Dubai, in Beijing. And like that, just building the proposition globally. And the funny thing about being from Asia is that whenever an American bank CEO wants to come out and meet with people in Asia, the first person they come out to say hello to is me. So when I published my book, for example, the foreword to the book was written by none other than Barney Frank, who co-authored the Dodd-Frank Act. And Barney is a dearest friend of mine. I go and hang out with him in Maine, where he now lives. And then you ask how is it that someone out of Asia, gets to plug into what's going on in the US? And the reason is that if you're a US journalist or someone trying to meet, Dick Kovacevich or even Jamie Dimon, you got to take a number and wait. But if you're from Asia, these people want to meet you, so I have actually met with, Jamie Dimon and so on. So I can name drop if I want. And that's the process by which I become eventually global. So that's where we are today.
That's amazing. Now, was there a group of you, like Brett and other people, that were sitting around talking one day, talking about the market and where it's going, and then you evolved to futures, always understanding the different technologies and the evolution of the industry? Like, was there like a group meetup of people that come and kind of like, hey, like, what do you think about this? And AI's coming in. We're like, is that what happens, or is it just naturally you're in the banking system? And it feels like Asia's sometimes ahead of North America and even Western culture altogether. So by comparison, are you just a futurist because you're in the Asia versus in the US?
I think between Brett and I don't know anyone else. Oh, the other person is Chris Skinner, who also used to live in Singapore. And he was a salesperson with Unisys or something, one of the older IT companies. And then he became a futurist. I went back to the UK and all that. And then now he lives in Poland. Also a dear friend, right? So it wasn't so much about Asia as it is about individuals. Brett, after he tried several things, including training, which he was running a pretty good training business in Dubai, he took a year out and he went back to Australia sat at home and worked on that first book of his. So it was us individually, coming to into our own, and then we find that we are different variations of each other in a way. So Chris has his own way of looking at things, and Brad's message is a lot to do with automation and the fact that the traditional bank branch doesn't work anymore. So that's his mantra. And by the time I matured, I'm a lot into the convergence of traditional banking with crypto. And that's one of the reasons why I'm very happy to be on your podcast, because I do see that convergence coming together. So I think we are just individuals, and then, we talk to each other a lot, and we're the dearest of friends because we've known each other for so long, and, and then we do exchange notes sometimes, but I think each of us bring a different value that's unique to ourselves.
I love it. Do you feel that Futurists kind of got not a bad word, like a stigma to it? Because I think, when we look back a couple of years ago, a lot of the people that were into NFTs, and when the when the market went down, they turned into futurists because now they're into AI. It seems like, you have these, stakeholders has been kind of using that term because they're jumping to every shiny new technology to say that they're early and that they're expert. Have you felt that, or is that just something that
Stephen,
we see
you're
here?
spot on that one. There are a number of people out there who are not futurists, but who are actually reactionaries. They react to the latest, breakthrough, and then start to put in their own little, spin on it. And the funny thing is that as they grow older, they also become cynical about the evolution that's coming, like playing into their face. Now, so I had to spend some time. I became a futurist over a period of time, and it's almost like changing religion. In order to before you even think about talking about the future of finance, you need to ask yourself, what does being a futurist mean? And you need to start by curing yourself of the present. You cannot be a futurist if you're commenting on today's headlines, today's newspaper headlines. And you cannot be a futurist if all you're trying to do is solve tomorrow's problems. You have to have a much longer timeline in terms of what you're looking at. And you have to have a far more rigorous idea of what transformational, or, the inflection points, what they should look like. In terms of news and information today, there are a number of very good people who follow trends in fintech, and they feed us with lots of information of who's doing what today, tomorrow, and there's a lot of activities. But like you and I, Stephen, we just had this comment before we started, which is that activity for its own sake is just more of the same. And then you start, stepping back and saying, hey, where is this leading? What are the inflection points that we need to be looking at? When can we call a transformation a real transformation that is a break from the way in which is not incremental change? And then on top of that, like I've been running this banking research publishing business since 1996. Every year is something about the future. If you run a conference, it'll be the future of banking tomorrow. And then the next year, it's the future of banking tomorrow. So that's not future, that's incremental change. And that's even more about productivity than a break in, the way in which society is configured and all of that. And the other thing is that when we take a longer timeline, things look different 10 years on as opposed to next year and the year after. So if you look at what we were looking at in 2007 and what we looked at in 2020, there are two different sets of issues. In 2007, the cloud didn't exist. The iPhone was just born. Bitcoin just started. And yet in 2007, we thought that the banking industry was going to blow up because it was more the U.S. banking crisis at that time, 2008, which was the New York Wall Street blow up, on the capital market side. So then 10 years later, the capital market doesn't count for anything. People even forgot there was a banking crisis, in 2008. But all the things that we were thinking about, like the cloud and the inception of AI and data processing, became huge defining characteristics of the banking industry by 2015, 2016. So in the same way, when we put our finger on what we need to look at today to figure out what is going to be consequential 10 years from now, then you start sieving out, what's incremental change, and then putting your finger on, what's transformational. So, like, lots of
I want to interrupt you. Can I ask you, when you talk about, looking back at 2007, 2008, what problem were you trying to solve in 1996 when you're like, hey, I'm standing up the Asian banker? This is, what was there a gap where it's like, hey, no one's coming together and sharing thoughts, or everyone's for themselves, or, all these people within these organizations are working in silos and we're not having, more holistic conversations? What was something that really kind of triggered you to be like, hey, we need to come together and have something where we can educate, maybe research and train the industry?
in 2008, in 2008, 1996, in 1996, I had the whole field to myself. I was Mr. Asia, and given the fact that I went cross border, I took a plane, went to the next country, the next country, the next country, go to Thailand, go to Vietnam, go to Hong Kong, go to Beijing, go to Korea. And each of these countries have people that thought that they were all transforming the industry all on their own. Like, they didn't know there was someone similar like them in another country. And they welcomed me because I was the only guy, that was piecing the whole story together. In fact, it was 2001 when I first had a regional awards program, and I held my breath. And then I said, everybody turn up in Singapore for these awards. And I held my breath, and everyone turned up from each of the countries. They went to the airport and took a flight to come to Singapore to attend my conference. And that was the first time that bankers from, all the different countries started to come together. So I think that in that period, because information was not readily available, and the publishing industry wasn't as developed as it is now, whatever information people got, they were very happy. In fact, the same thing applies in the US. Like, you've got lots of state level community banks that for the longest time thought that they were the only ones doing what they were doing, and they thought they were even transformational, not realizing that there are other community banks doing the same thing, or the standards were actually much higher than they thought. So that was the initial phase at that time. In 2007, I think by that time, the industry had matured a lot. There was a lot of information, but sieving out what is transformational from what is incremental was not in there yet. In fact, when banks talked about innovation in 2007, they would think data processing. They just come from data warehousing, to being able to process real-time data. And even if they were able to process real-time data, the technology still insisted that they batch process real-time data. In other words, you don't actually get to see real-time data till tomorrow, because you got to batch process it at the back end, and then the batch processing also meant that you have a downtime at the end of the day. So there's no such thing as 24/7, and then they were moving from ATMs to call centers in 2007, and they thought that was transformational. Today, when they moved from call centers to chatbots, they thought that was transformational. And then when they put AI into the chatbots, they thought that was transformational. But when you look at all that in a timeline, actually it was incremental. It wasn't transformational, and it didn't change anything about the industry. The institutions still maintain their primary relationship, and actually the ball game of the business was cost management, which was to do the same things at a cheaper and cheaper.
That seems
level.
like that's been the bank's mandate for a long time.
Yeah. So then, but what I spend my time now is asking myself, what happens when the whole intermediation business disintegrates, and where the individual transacting with each other does not need a financial institution between them? So those are the kind of issues that I'm thinking about. And they are very difficult issues, because from what I've seen, the intermediation business hasn't gone away. In fact, it's being reinforced by regulators who insist on passing transformation and game-changing type technologies back to the traditional institutions. And so the traditional institutions still think that they can ace this game, but the carpet is being pulled from under their feet. So So that's what we need to keep our eye on. And that's why the work that you do on crypto is very interesting, because I'm looking at which point do the rules of crypto start to creep into traditional banking. And actually, that's where we are right now.
And that's a great segue to the Asian banker. What are some of your thoughts around how crypto is not even infiltrating? Now, it's funny, crypto exchanges look like more like banks, and banks are trying to look more like crypto exchanges now. What are your thoughts on, where we are, especially someone that's been, talking about innovation, speaking to some of the industry leaders for the last 30 years? Are we kind of, Michael Groniger, who's, one of the co-founders of Chainhouse, says, one day every company is going to be a crypto company. What are your thoughts along those lines?
And I say that in my book. So what I say in my book is that the magic wasn't that Bitcoin went up to 65,000. The magic is that any one of us can create our own crypto. The whole idea is that we can all create our own tokens. It's a question of whether our friends and family would want to accept the valuation that we give to the token. And we have the example of Sam Bankman-Fried, who came up with his own token, gave it a value of $180 something, and the market accepted it. And then he went out and leveraged his token. The things that Sam Bankman-Fried did, anyone can do. So that's where we are, right? Now, then the interesting thing about the rules of crypto, bankers have been pushing back on it and thinking, oh no, crypto is not about us. And then what you see happening in traditional banking is that slowly, because they became digital, that's why Silicon Valley Bank happened, which is when you're digital, a bank run is digital. So, you can have a tweet from Peter Thiel on a Tuesday, on a Wednesday, you lose 10 billion. On a Thursday, you lose more. And then on a Friday, you close shop, and there was never a queue out of your branch. Now, when you think about what crypto is instantly 24/7. It creates its own liquidity pools. It is highly not leveraged. It is at par value, and it's got applications on that. And banking is finding that it's walking into that ecosystem itself as a bank. So the Silicon Valley Bank crisis in 2022 is still evolving, and banks figure out that now they have to have the same robustness of a crypto exchange. They, even for their standard deposit, bank account with their deposit liabilities business. So the rules are now seeping in. And so the banking industry is looking over the shoulder of the crypto industry and saying, okay, how do we operate like a crypto exchange or a crypto platform without being a crypto player, right?
I want to interrupt you. What do you think? Do you think it'll be easier for crypto exchanges to add banking capabilities? We see Kraken and others, filing to get charters. Or is it easier for a bank to add in, crypto functionality and the ability to purchase NFTs or things like? What do you think? I'm curious your thoughts on that. Like, which one would be able to kind of eat up the market share of the other faster? Do you think?
The big game changer on that is when bank deposits become tokenized. When bank deposits become, and they are on the verge of becoming tokenized, because the Bank for International Settlements has even put out the roadmap. 2025 January is when banks, can recognize tokenized assets on their balance sheet, right? So the roadmap is in place now. Now, and also the BIS is influencing the banking systems around the world to give up the idea of a retail CBDC, central bank digital currency, and CBDCs have already been rejected in the US. Congress is clear about the fact that that they will not tolerate a CBDC proposal from the retail CBDC proposal from either the Federal Reserve Bank or the Treasury. But what the Bank for International Settlements is saying now is that central banks should just focus on wholesale CBDC, but tokenize their deposit base. Now, when that happens, the nature of competition for banking changes. It's no longer the interest rate that you provide on your deposit. It's actually the functionality that you provide on your deposits. When you tokenize your deposits, what can your customers do with your deposits? Are your tokenized deposits, transferable? Are they interoperable? Do they have functionalities that are user friendly? Things like that. Now that's when we will answer this question, which is, will banks be good at it, or will the current token as platforms, like crypto.com and all that, whether they are native to tokenized assets? The answer right now is that it's half and half, only because the crypto platforms haven't added the functionality element on their platforms yet. So they're as passive as the traditional banks, and the traditional banks are getting into the game. So, both sides come up to the starting line when the functionality element is added to crypto or to digitized assets, digital
Our
assets in general. We've learned a lot from NFTs. The funny thing about NFTs is that it's big in the mind of a lot of crypto people, but actually as an industry, it's pretty small. It's actually tiny, but it is potentially a benchmark industry. In other words, when you put a token out, how is it valued, or what gives it the valuation, and how do you add functionality to it? We have a lot to learn from how the NFT industry has evolved to where it is right now, And then when deposits are tokenized, it just changes behavior totally. And I actually make the prediction that it is not inconceivable that tokenized deposits in the banking front will prepare the general public to become so comfortable with tokenized assets that they will actually move away from the banking industry, because now they're very happy and, they're very comfortable with the whole digital asset space. That's where it becomes an open field where, it's a new game with new rules, and it's open for new platforms to become the dominant, the dominant player in that industry. Now,
I'm
we've
going to interrupt
already
you. Do you think banks are in trouble? Like, I'm just thinking of my sons. I have a 2 and a 4-year-old. Like, they're on Roblox. That's how they're paying for things. We never, as parents, we never take them into the bank. I remember my parents used to take us to the bank, and they do deposit. They have that little tube, and they'd send, little balloons in there for the kids. But like, my kids don't experience that. So do you, like, I know Brent and, your friend Brent's like, hey, banks are in trouble. Do you think banks are in trouble? Like, at the pace they innovate, it's a little bit scary to think that the next generation is never going to walk into a bank.
The regulators will protect the banks as far as they can. And actually, that's exactly the point I was coming to, which is that if banks tokenize their deposits, the unintended consequence of that will be that they will be actually educating their customers to become token natives. And once they become token natives, that's when a new set of institutions will become the dominant players in that. And we've seen already what happens on the platform industry as it evolved from desktop to mobile. And then now we're moving to device independent. And each phase has a different set of institutions which are native to it. And to answer your question, yes, when we finally have tokenized deposits, we will have new players who will be native to tokenize these deposits in a way that banks are today.
What are you seeing in Asia when it comes to like social media apps? I know in Dubai, I think it's Korean. When I went out there, you could do everything from there, order food, cars. And we're seeing these massive super apps. I know Asia's not a stranger to that with things like WePay and WeChat. But we don't see that as much in the United States and in North America and Western world. What are your thoughts? Because you're traveling back and forth. Are you saying, like, why isn't there a bigger play in North America where people are always on their phones
The
versus in
super
Asia?
app phenomenon, and I spent a lot of time in China. I was there when in 2010, when Alibaba and Tencent and WeChat, in China we all use WeChat, right? So we're talking to each other, and then my staff say, "Guess what? You can do payments on it." And that was 2010. I still remember. Now the thing is that whole super app phenomenon was unique to China in a very special period in history where the regulators hadn't come on stream yet, and these two players were able to scale incredibly, and they became the world's defining super apps. Interesting thing is when they tried to replicate that model in Southeast Asia, and in Southeast Asia we have the Southeast Asian equivalent of super apps like Grab, which is which is a taxi, or rather a ride-hailing company, and then which is trying to add functionalities to it. It became even more difficult because Southeast Asia is highly fragmented. It's 12, 15 countries, all with different regimes and different social practices and all that. It was very difficult to get super apps going. And in fact, there are probably 3 or 4 super app wannabes rather than, any defining super app. And then you go to India. Now, the thing is this, the Chinese government today is a lot more competent in regulating platforms. Okay. The 2010 to 2014 period, they were just getting their act together. In fact, in 2013, I was having, meetings with the regulators in China, and they were asking me things like, how do you regulate a non-bank deposit-taking business? And I said, well, you already have WeChat and Alipay. Why are you asking me this question 3 years later? We all use WeChat. So the regulator was actually just getting the act together. Today, after 2018, when they finally came up with a super regulator in China, there is not going to be another Alipay or a Tencent, having the kind of freedom of access. In fact, the regulator wants that platform phenomenon to be brought back into the banking industry. They try to do that. Now, the Indians looked at what was happening in China, but because India was a far more regulated country than China was in that period, the Indian regulator, unilaterally created its own payment universe, which was to give every Indian national an identity, an Aadhaar, the identity scheme. And then on that came up the UPI, the Universal Payment Interface, which then enabled any platform to use the identity program to be a interoperable payment platform. The short answer to where we are with super apps is that the Indian regulator, stymied the super app approach by making every app highly fragmented. So now you need to think about your app in a fragmented environment where you need to be interoperable with multiple different apps instead of being a super app by yourself. So we now have different working models around the world. And then in the US, of course, even the super app players like Facebook could have, or Messenger could have easily been a super app. It could have easily been a super app. But then it eschewed it because, they were afraid of regulation and all that. So where we are is we are on the cusp of waiting to see how the individual will be empowered so that the individual will become the super app. In other words, I decide who I want to have on my platform. And blockchain technology enables the individual to do that, and so then the power of the relationship is taken away from the platform players as we know them today. But then that puts into question how the VC is going to fund who to support, who to scale, So I think that's where we are heading in general.
What are your thoughts about regulation? Because you talked a lot about regulation, but you also talked a lot about crypto. We saw the SEC finally allowed, the Bitcoin spot ETF after pretty much being sued into being forced into it. Where do you see regulations going? What do you see around the world? Because I know Singapore, Hong Kong has emerging crypto regulation. We see what they're doing in the EU with MiCA, which is being, deemed one of the most comprehensive regulations. Dubai has its own virtual asset regulator. What are your thoughts around regulation?
Actually, in some of these jurisdictions, like you take Dubai, Abu Dhabi, the regulator, there are 2 regulators in the UAE. One is domestic and the other is international. So Dubai is the DIFC, which is more of a, offshore international regulator. The thing is that in Hong Kong, Singapore, these regulators take on almost like a marketing perspective to their regulation. They want everyone to be domiciled in their respective jurisdictions so that they can have a watching brief of who's doing what. So they want the applications to come in so that they can read the applications and understand what it is that you do. And then what they end up allowing to be done on shore turns out to be something very highly restrictive as a result. What I say in my book was that the thing about regulation is the best way to describe regulation is like when the motorized vehicle was invented and popularized with Henry Ford in 1901, was that the original set of regulation were all stacked up against the motorized vehicle, because the combustible engine car, the motor car was noisy, was slow, it damaged the streets, it frightened the horses, and it was uncomfortable and all of that. So all of the regulations were stacked up against the new technology. But then as the new technology became increasingly, when the automobile became, faster, quieter, more comfortable, didn't damage the streets, the regulations just dropped by the wayside and it became irrelevant to apply them. So I think that's what we will see taking place in finance, which is that a lot of the regulation stacked up against the innovations taking place because they attract, bad actors. They make it uncertain. They make it susceptible for being, defrauded and all that. But as we become more of a network society, the safety and soundness of a financial system is in the network itself. And I think that you'll see a lot of the regulations as we know them today to be falling by the wayside. And then you'll see a new set of regulations coming on to regulate the network effect rather than the platforms themselves.
I love it. You talked a lot about, us becoming the super app versus having, these large organizations. We're going to dive into your book. But you mentioned something in your book about, you're forecasting the unprecedented personalization of the banking service. And then you talked about us being the super app. Can you kind of combine those two theories and, maybe explain exactly what you meant by this, this euphoria of personalization when it comes to banking?
Yeah, in fact, whenever I say personalization, what happens is the bankers tell me, we know what you're talking about. We are able to make the customer feel like he's the only customer in the world. We're getting there. We're almost there. We make our customers feel great. We design products around themselves and all that. And then I say to them, personalization means that the customer doesn't need you anymore. That he's able to execute the transactions that he wants from his own platforms and then decide who he wants to relate to. Now, conceptually, that technology already exists because that's what Bitcoin is, which is you and I can send Bitcoins to each other without having a bank, intermediary, and I only need to give you the code and I can have that transferred to you. So the peer-to-peer element in personalization, the technology already exists. And the only reason it is not being effected is because of the way in which disruptors are being funded. They're being funded by venture capitalists who want to insist that everything sits on a platform somewhere. And in fact, they're doing the same thing with AI today. They want to see AI sitting on platforms. But AI as a technology is something that we can apply to institutions, to individuals. We can garner all of the information that we have access to and create our own, AGI in a way. So conceptually, these possibilities of personalization exist. It's just that we need to go through the process by which they're funded, they are regulated, and the unintended consequences, and I know that we see in society. Now, the example I give about society being able to regulate itself is from the dancing industry, dancing phenomenon, right? It doesn't matter if you're a ballroom dancer or a salsa dancer or a tango dancer. It's just so amazing that wherever you go in the world, in salsa and enchufla or a crossbody lead, it's the same in Singapore as it is in Washington, as it is in Cuba, as it is in Colombia. And then you look around and you see there's no global authority on salsa movements, that approves, new steps or something like that, and ballroom, the same thing, you've got all those different moves. And then not only is there no global authority, the changes that take place in the industry are quickly absorbed and internationalized and globalized. So when you have new forms of, Latin dances like Zouk or Kizomba or something, everyone knows what it is, So human society is actually able to organize itself far more profoundly without regulation than we imagine, So I put that at one extreme and I say that that's what we are capable of. And then put banking at the other extreme and say, this is how we're dealing with it today, but technology is going to take us somewhere along that route where, we won't be regulated the way we are today, but, we probably never reach that, self-regulation, but regulation will exist within the network system by which we interact with each other, and we will get there.
And your book is called The Great Transition, The Personalization of Finance is Here. You talk a lot about TradFi. You get into a number of factors, including what you're talking about maybe now is like consumer behavior, as well as, tech. One of the concepts, though, is like, what do you feel is happening in the financial industry that people were missing that you needed to write it? Like, what was missing that you're like, hey, we need to start talking about this? Everyone's talking about automation and technology, but there's the personalization of finance. Where was the gap there that you felt you needed to write this book?
It wasn't so much a gap as it was a journey. And I started by saying, okay, look, I want to write a book that is consequential about the future of finance. And then when I was starting to write, I was writing like everybody else. And I was describing that transition from, Brad King covers this very well, which is we will come to a day when we will not have any branches. Banking is not somewhere you go to, it's on what you do. All of that is good. But then when crypto came along, it's like, the ability to transact without an institutional intermediary already exists. So then I saw that gap, which is that where crypto is and where banking was. Banking is essentially an intermediary business. In fact, that's the one area that I'm struggling with right now, which is that all through human society, human history, we've never had the concept of a lack of an intermediary, So they keep changing and transposing and morphing, but always there's an intermediary effect. So I spent a lot of time studying intermediaries as we know them today. And the biggest culprit in intermediaries today are the venture capitalists themselves. And that's why in banking, for example, I say this thing called inclusive finance, it is a lie, and because the whole idea is to onboard millions of customers and then to monetize them. The venture capitalist is not interested in making finance, ubiquitous to the unbanked or, there is no goodwill in that. The idea is
Are you shocked by the amount of underbanked and underserved, people in the United States, especially? I think people think, third world countries, places in Africa. Are you shocked by the amount of Americans that are unbanked or underbanked?
Yeah, in fact, the UN, the World Bank publishes an annual data about the number of people around the world who are unbanked and underbanked, right? And my answer to that data that they put out is, why did they need banking in the first place? It's not banking that they need. They need services. They need to remit money. They need access to capital. They don't need banking. What you're saying to them is banking is this such a desirable service that everybody should have access to. But what is banking? Banking is a highly overcapitalized, expensive, technology is intensive and KYC, heavy industry, which adds to the cost of the transaction beyond, the ability of many of the unbanked and underbanks to afford it. So that's not what we should be looking at. We should be looking at, access to payments, access to capital, access to lending, and then work out what is the best form that is, that can give them that access. And there are enough examples now around the world of alternative forms of financial intermediation. When I look at Bangladesh, for example, it started with the microfinance industry. And the microfinance industry was about lending money to groups of 6 women, to buy a bicycle so that they could buy fresh vegetable from the next town and raise their level of income. That's it. And today, just through that phenomenon alone, Bangladesh per capita GDP has now exceeded that of India. And the Indians are actually
Wow.
very upset about that. And this is the country that Henry Kissinger once called a basket case. That like there is no hope. In 1971, there is no hope for Bangladesh. And today it's got a per capita GDP that is, above a number of the larger countries which have had a much stronger growth. And that's just by providing financial intermediation without banking. So what the global regulators and the global World Bank, the development banks should be thinking about is not banking. It's it's access to finance. Now, in terms of the unbanked in the US, I think because there is a large undocumented population in the US, that's what we're actually looking at. And on top of that, traditional banking is expensive in the US, and so therefore many of the undocumented, workforce look for alternative forms. And
Right.
in fact, they end up paying even more as a result. Payday lending, for example, is basically usury, but what is the alternative for them, to be part of the formal banking industry? And the formal banking industry in the US itself is ripe for a transformation. If you take an average payment processing, the number of players involved in a normal Visa transaction is far more than what's happening in Africa today with Flutterwave in Nigeria, for example, who are intermediary free, and all the profit of the transaction accrues to the company directly in Nigeria and not to a listed company in the US. So there's a lot happening and a lot of vested interests that need to be broken down, and it will, work its way through. And then what I also say in my book is this, that the inflection points at which finance actually makes that change only ever happens in times of crisis. It
Mm.
doesn't happen as a form of intention or design of the current players. If you take Visa or Mastercard, yes, they are funding a whole range of new innovations in finance, but what they're trying to do is to absorb them back into the traditional model that they have, so that the profit continues to accrue to themselves. And that's why Visa and Mastercard are incredibly profitable, even though there are alternative models coming on stream right now.
What do you think are some of the challenges, even in this personalization of banking world? What are going to be some of the challenges do you believe are going to come up for consumers?
Challenges for consumers is really access to financing to build the wealth that they deserve. On that front, actually, it's different challenges in different markets. And right now, around the world, there are critical mass or a momentum in different countries which are being expressed differently. So you take a country like Indonesia, for example, which had been a basket case for a long time, and then today it's a 1.2, $1.3 trillion economy. And it's 240 million people. It's almost two-thirds the size of the US. And it is dealing with its own challenges in its own way, which are specific to Indonesia, which are different from the way in which the Chinese are, building their infrastructure, and the way in which the Indians are building the infrastructure. Something I've observed from large countries is that there are many layers of intermediaries. You have the large banks, national banks, and then you have the provincial banks, and you go rural banks, rural credit cooperatives, and in effect, right down to the last money lender at the bottom of the pile. The whole intermediary business will be multifaceted, but what technology does is it enables anyone who wants to be in the business to plug in and be a player. So I think that regulators have to take a view of what it is that they want to see happening in their economy. If what they want to do is to protect the incumbent, they do it at a great cost to themselves, because the incumbent banking system in most of the countries around us is that, as I said, it's capital intensive, it's cost intensive, and therefore the value will not accrue to the economy itself. So what I've seen regulators do is that when the disruptors were coming on stream in the early 2000s into the 2010s, the regulators' mindset was to protect the incumbents, to
Right.
make sure that all these new technologies accrue back to the incumbents. Now we are in a phase where regulators are comfortable enough with all the changes taking place that they're willing to see, like in many countries today, there are new licenses for digital banks, and then also new laws in place to allow digital assets to become mainstream and to be licensed and so on. So they're willing to accept a multifaceted ecosystem in their respective jurisdictions, and then they will evolve again. So the regulators themselves are evolving as they go along.
As you focus on the future and you see a lot of the disruption when you talk about the future of finance, fintechs, crypto exchanges, we see a lot of players in the EU that are kind of like non banks, but as you're saying, they're providing all the services that people actually want from their banking institution. What are some of the things, especially as we look in the crypto space, that they should bring from the traditional space? Like, I think a lot when I'm, talking to protocols, the word governance comes up a lot, which we think that, the traditional institutions have done a great job at. What are some of the things that, although we're trying to disrupt, that we might want to bring into that framework that may cause us trouble if we don't kind of adopt the traditional mindset?
Very, 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 very good point. And I've only got one word for what we should bring from the traditional players, which is trust. And that's something, I mean, you must give credit to the traditional banks. Their IT managers, every single day, they worry themselves silly, if there's a breakdown in surveys or if money gets stolen and stuff like that. And for everything that traditional banks have done wrong, the trust part is what they have secured and they've protected admirably and just universally. And that's what you want to see transposed from the banking industry that we know today to whatever it can become in the future.
That's such a great answer. And I think that's what we're lacking a lot, especially as we get into, as you're saying, personalization and finance, Web3, decentralization. A lot of these decentralized financing protocols, you don't trust that they're not going to be hacked. You don't trust that your money is going to be there tomorrow. Because to your point, they haven't built in those systems. They haven't done the audits. They haven't done the pen testing to ensure that they're not going to lose your money. And while a lot of them are like, hey, like a bank, like, hey, if we get hacked, you're still going to have your money there. A lot of them go out of business and people don't even know they lost millions of dollars. What are your predictions now for the future of finance over the next 20 years? We just had Grant Blaisdell from Copernic Space. So talking about space assets, digital assets going to space. We see Filecoin doing a lot of work out there in space and, sending data. What are your thoughts on what the next 20 years looks like?
Wow. Well, we can all throw ideas up there, depending on what our favorite themes are, right? So, if space is your thing, then, there's so much that we can talk about, except that you need triggers. So when will man, take space really seriously where, your kids or, the kids of my friends, will even think about, traveling out whenever there's a crisis, when there's a war on planet Earth, that's, and when maybe there's overpopulation or lack of food or something, that's a trigger that takes us to the next level, even if the preparatory work is being done right now. Elon Musk can go up there and prepare all the glass houses in Mars, but it only gets populated when people want to go there, and stay there. So the thing that I worry about for the next 20 years most is the effect that personalization will have on society as a whole. When individuals don't need intermediaries, when they become intermediaries themselves and create communities around themselves. In fact, I end my book that way, but I started by writing about the future of finance. Then I realized that I was actually describing the future of society as a whole. And already we are finding that, in a country like the US, where personal liberties are so important, as sacrosanct, when you take it to its extreme, that's what the US looks like today. It becomes dysfunctional, it becomes, insecure, all of that. And so the personalization of finance is also the aggrandizement of the personalization of the individual, right? Of the value of the individual. So I think that we already need to start thinking about how society is configured as a result of giving not just personal liberties, but personal value, personal, substance to, the personal control over community. We need new forms of organizing ourselves, new political systems. Those are the things that I worry about for where we are today and where we're going in the next 20 years.
I love that. I love that answer. Do you think that when you talk about personalization of finance, do you think that generational change is going to have a big impact on the financial institutions? Like, you're in the US, I'm in Canada. There's a good chance that 90% of people under 25 that don't already have a house aren't going to be able to get into their first house anytime soon. So they're not going to be going for mortgages. They're not going to be worrying about the stock market. They're busy, they're making brand deals on TikTok where they'll make more than the S&P 5. Like, do you think the changing of society will have a big impact? Where, and I know we kind of touched on it before about the younger generation not going to the bank because they're not familiar with it, but almost not going to the bank because there's no need for it because they don't need to make these life-changing transactions that maybe me and my parents had to make.
What I say in my book, and this is something that, all the people interested in innovation on your podcast would do well to listen to, is that I say in my book, if the product doesn't change, nothing changed. Okay. So if all the innovations that you're doing in finance, or, the technology that you're investing in or you're proposing and all that doesn't change the nature of the product, if the product you're selling is still good old fashioned mortgage, nothing changed. So when we think about the next generation where property prices are beyond their reach, but now they're able to own fractional assets, of ownership of a piece of property, and they're able to flip it at will. That means, in your bedroom, on your mobile phone, you can buy and sell a mortgage as you like. Then it's no longer a mortgage. It's something else. You need to give it a new name. You need to describe it differently. It becomes a lifestyle choice. No one's going to hang on with a mortgage for 30 years of their life. They're going to have 5 years of this particular piece of property and then another 5 years of something else, and they're going to share that. And sharing itself, is no longer just timeshare. It's asset sharing, it's digital assets and stuff like that. So we need new names. We need new product features. That's what we need to do to be relevant to the next generation.
I love it. I love your answers. The trust one was really good. That's a really good answer too. The book is definitely something
If
that
the
people
product
have
doesn't change, nothing changes.
that people have to get out there and read this full book. One thing that's interesting though is like, who do you think, you're traveling all around the world? You just came back from Africa. You're in Singapore. You're going to the United States. Who do you think is kind of leading the way when they? And I know it's kind of hard to measure a winner versus loser. It's not the Olympics, but if you had to say somebody or a jurisdiction is really understanding the concept of innovation, it's really understanding the concept of the personalization of finance. What jurisdiction comes to mind if I had to, press you right now and say, hey, name a jurisdiction that comes to mind when you think about, oh, they're doing something right here. They understand at least the concepts from your book.
A lot of the innovations in technology as a whole still comes from the United States. So, and I call it an original state, and the rest of us are peripheral states. And the rest of us get to pick and choose what we want to, apply and reject the things that we don't want to. So the rest of us look a lot more organized, a lot more deliberate, and a lot more directional in terms of what we want to achieve with technology. Take AI right now. AI could only get to where it is today because of the liberty of information, the freedom of information in the US. And China, on the other hand, can pick and choose what about AI it likes, and then not allow, generative AI within the country to be used for, GPTs, because, it will throw up all kinds of information that may be against the state, for example. So China is able to pick and choose, so there are the countries and the ecosystems that originate ideas, and there are the rest of us who are able to be application developers. We build applications around it, and then we can scale and we look good. So I think top of the line, a lot of the innovations still come out of the US, but the countries that perfect it and look good are the ones which are of middle size, okay, 100 million people and above in terms of population. And there, I would even put in countries like Vietnam, where people are not talking very much about it yet, but its political system is coming together quite well, where they're able to pick and choose technologies that they want to invest in, just like China. And then, of course, Indonesia, India, Nigeria, these are the countries that are going to look really good. But the fact that they look really good doesn't mean that they are originators of technology. So, and that's how the game will be played, going forward.
I love it. You had this an interesting LinkedIn post where you said whoever controls identity controls finance. And we've spoken to a lot of L2 layer 2 projects here. Where do you see, decentralized identity? Is that the main thing for your focus? We know, a lot of the major outlets around the world, organizations are talking about decentralized identity. What are your thoughts there?
Yeah, in fact, I make this point in my book where we are actually moving from the markets economy to the network economy. And when we make that transition, we sometimes get confused what it is that we're dealing with. The idea of a decentralized identity is where the network effect enables us to validate each other. And even there, we don't need intermediaries. We don't need the state to validate us. We're actually validating each other. So the more networked you are, the more you're a known quantity, the easier it is to lend you money to make a payment to you because your network knows who you are. You're a known quantity. And that is the holy grail of identity in the network world. A lot of work is being put in place right now, and there are different options, different models that are going on stream. Regulators are pushing back on models where any one platform, pulls out a lot of personal information on individuals, that can put the state at risk as a result. So whoever is developing identity systems need to figure out how identity doesn't sit on any one platform. It's not a cloud
Right.
game, it's a network game. So I think we're still in the formative years of those developments. But I think what will probably happen is that just like in blockchain, at the end of the day, the individual will have control over his identity. And that's something I say in my book. And what's devious about identities in the future is that each of us can have multiple identities. If the state controls you, then you have a, social security number, and that's who you are. But
Right.
if you control your own identity, you can be different things to different people. So then that creates a whole new set of challenges and the way in which society itself needs to be configured. So those are the issues where I think identity is in a transitionary phase, and we need to see how that will play out. The fact that all of the identity initiatives are funded by venture capitalists means that they want to be rewarded for their investments in identity systems. Identity should technically be a social good, but the fact that the technology is being invested in for profit. So that we haven't seen yet. You take Sam Altman's, the globe, one globe payment, identity system that he's been trying to generate. And that's actually blockchain based. But
Right.
that's really Web3 technology. But he's had pushback in several jurisdictions. Hong Kong said that you wouldn't be allowed to, to collect data on Hong Kong residents because there's too much data that accrues to one identity player. So the identity players have to figure out how the individual will continue to have control over the identity. But then that creates the other problem, which is the individual can have multiple identities.
That's so true. I think once you can open up some of that identity, it's a lot easier, right? It enters a lot more of these fintechs in the game. I'm thinking about like even my car insurance. Like I don't want to call another car insurance company, have to go through all that same information that I had to go through. But if I could just port them and say, hey, this is the exact same information this company has, give me a quote based on this information. That takes this, that process down from 33 minutes to 30 seconds. And I think once you're able to open up some of those gateways, a lot more, as you said, a lot more personalization can come in. And, that's really why a lot of us keep a lot of the same applications, the same carriers, the same service providers, the same banks, is because we're just too busy to want to change it.
Yeah.
Lastly, sorry, you want to add
Yeah,
into
I was
that?
going to say to that, and what you've been talking about in terms of, having to repeat your information for different applications you're making, is that's the world we know today, which is these players are asking, even the information on your identity that they're asking for are static information, which is they're
Yeah.
asking something about you, which is historical. You were born in 19 whatever, and that's historical information. But the information that enables them to make decisions is actually, real-time information. It's future forward type of information. And that's what they need to be capturing, and
Right.
they're not. So we've got a transition to do on that front. Yeah.
What's the future? What are you looking at? Like, and I know it must be hard for you to kind of like, obviously AI is a conversation. I'm glad we didn't even talk too much about AI because I love when we can talk about the reasoning for AI based on what's currently happening and what we see in the next few years. What's the technology that you're looking closely at? I think it's hard to deny that AI is going to, I think even bolster blockchain, with deep fakes and everything coming on in AI and changing my face and putting it on somebody else's in real time looking video. Blockchain is going to be pretty important in the emergence of AI. But is there any other technology that we haven't thought about?
The one technology that I'm putting my finger on is device independence. So we've made that transition from desktop to mobile,
Right.
and I'm very curious how device independence will play out, because once you put AI into everything around us, we already have AI in the autonomous vehicles. So they have a function of their own. They can park themselves, things like that. So that takes us away from our incredible dependence on the mobile device today. So I look at robotics, I look at autonomous vehicles, I look at technology that sits on things like refrigerators and stoves and stuff. You can put AI on so much around us that we become less dependent on the mobile device that we're accustomed to today. So that will be the next transition. There's a lot happening on that front. And then, the thing is that when will the inflection point come is when you're able to deploy AI right into the devices themselves directly. And that will like not happening for a long time. And then suddenly you'll see a huge breakthrough, and it just changes the way in which we live.
For people that are working at the banks, I was listening to a podcast earlier today. This will be our last topic, where they're talking like, people are begging, manufacturing companies are begging, promoting, advertising for people to come work in the factories again, like they did in World War II. Do you think the banks are going to be at that kind of static point as well, where it's like people don't want to work in factories anymore when they can make $80,000 from Nike to kind of do a funky dance online? Are the banks going to end up like that? Do you think like the banks are nearer to that than we think, where they're going to be, spending a lot of money to get people to come want to work at the bank again?
That only applies if, wealth management or customer-centric relationships at a personal level is important. Outside of that, 90% of banking is automatable. 90% of the transactions in banking do not need human intervention. And we see that already in payments. A lot of the KYC and customer processing business is now highly automated. So, and not only is it automated, AI can help make meaning of the transaction, that is, see patterns that we don't see. So not in banking. In fact, even in factories, in manufacturing, the reason manufacturing is going back to developed countries is because today, and you see this happening in automobile manufacturing, where the French car makers like Renault are now making cars back in France because there's no one in the factory. It costs the same manufacturing a car in China as it is in France because the labor costs are minimal, and there's a high level of automation. So it doesn't matter where you are in the world, manufacturing can come back to where you are, So I think that's really the phenomenon that's taking place. And that's why Tesla is as big in Texas as it is in Shanghai, and then now in Mexico and so on. And that's more to do with tax breaks and market access than it has to do with labor.
I love it. What's one last line that you want to leave the people with listening to this episode?
You've been really good about, bringing up the way to think about the future. So I think the one last line really is that it's more important to know how to think about the future than to know, what the future will be exactly.
I love it. I love it. Where's the best place for people to reach you? You're more popular than me on LinkedIn, which I'm a little bit jealous of. Where's the best place for people to reach you?
Not as much as I want to be, and I'm curious about that too, but EmmanuelDaniel.com is the best place because that's where I aggregate everything I do, both my personal travels, my future books on things like civilization, and the work I've been doing in finance. So all of that, EmmanuelDaniel.com.
I love it. I love that you didn't spend the whole time talking about AI and you just kind of intricated it into certain discussions. That's a
Yeah.
true sign of a futurist, in my opinion. Emmanuel, thank you so much. This is one of my favorite episodes.
Stephen, it's been great. Thank you so much. Yeah.